the expertise that is available to you from Warren Wealth Management. Today we're going to talk once again to Marcus Warren. He joins me now. Marcus, welcome back to the show.
Thank you.
Okay, I'm going to jump right in here because it seems that recently, usually when you come on, we've talked about how the market has been, bullish and everything's moving forward and good.
Yeah.
But I hear a lot of pundits on now talking about volatility. You said, hey, things are changing a little bit. Talk about that.
Yeah, so, the market so far year to date, the market is down, and, to hear it from the news media, things of that nature, we are in that correction territory. And generally what happens when there's a blip or when there's the market gets shaky is investors tend to panic. So, I just want to, kind of give everybody at least some peace of mind on what to do kind of moving forward.
Yeah, and you've preached this since you began appearing on the show. You said, look, you've got to block out the noise. The last thing you want to do is someone like myself, some guy who really doesn't know much about the market, who's on the news, who's going to shake you up a little bit and get you emotionally to make decisions you wouldn't normally make. Is that correct? Well, that's what you mean when you say block out the noise, right?
Yeah, well, because you have the media. It's out there. You have to tune out the noise. You have CNBC, Fox Business, Wall Street Journal, all of these, all of this noise that, sometimes really seeps down into the psyche of the investor. And really, the media focuses on the short term. They're always talking about what's happening short term. Mm-hmm. But people need to take that step back and focus on what they want to achieve long term, especially in regards to investments and retirement. So number one, you need to just tune out the noise. Hopefully people have a plan and they're working that plan and not listening to those pundits on those shows.
Yeah, how often, Marcus, do you get with a client and they start talking from an emotional standpoint and you go, wait a minute now, let me show you some things here, and then you can kind of correct them due to your resources and your knowledge. Yeah. But I'm sure you get that a lot because you can't blame someone when you're surrounded with that noise and you're watching. You can't help but be affected, but emotions are the last thing you want to get involved with, right?
Yeah, so I am a financial planner. I know all the numbers. I'm a tax enrolled agent. I know everything about taxes, but what I spend most of my time doing is being a psychologist to most of the clients and people that I talk to because of these emotions. They get into their feelings and emotions when the market starts to teeter a little bit. And so really when we talk about the market cycles, there's two emotions that drive the market, and that's fear and that's greed. Not too long ago, really for the last 12 years, greed has really factored into it, but now we're in that situation now where fear is starting to creep in, and people tend to do the wrong thing. They do it at the wrong time, and they do it all the times when it comes to those two emotions.
Okay, let's talk about a term that you use, dollar cost averaging. Not that you use, that a lot of experts like you use. What exactly is dollar cost averaging, and how can you use it?
So dollar cost averaging is when you are basically systematically and consistently buying into the market. It normally happens during the accumulation phase. So as you're building up your nest egg and you're putting money in your IRA, your 401k, your company retirement plan, you basically are dollar cost averaging your way into the market. Now, when the market drops like it has so far this year, it's good for those people who are putting money into those company retirement plans because, in essence, you're doing what you're supposed to do and you're buying low. So now when the market dips, you're actually buying up more shares and pretty much evening out. You're not eliminating risk, but at least you're evening out some of those times when you bought when the market was high. And so if you are consistent about what you're doing, you should be fine in the long term.
Hedging your bet a little bit.
Yeah, pretty much, exactly.
Okay, so I'll ask you this. Although you do not want a knee-jerk reaction, you don't want emotions to get involved. Mm-hmm. On the other hand, on the other side of the coin, you don't want to just sit on the sidelines and just hold steady, right? You do have to react a little bit. True?
Yeah, you do. So what generally happens is when the market has a pullback or a setback, what happens is people tend to want to jump out. And they want to time the market. They want to wait until the market goes back up before they get back in. Number one, you're in this perpetual cycle of doing the opposite of what you're supposed to do because you're supposed to buy low and sell high. But what happens when these emotions kick in and you try to time the market, you tend to want to buy high and then you end up selling low. And once you sell out of the market, you never know when to get back in. So it's kind of like it's like double dutch. Double dutch when they're doing the jump ropes, and the person on the side is just waiting to get in, and it's just like you don't know when to get in, and then you just all that stuff.
I like
and
this.
So it's the same thing. And so as the ropes are moving and you're waiting to get in, people lose out on a lot of those gains.
Okay, so what are you telling clients right now? If you, by the way, are close to or at retirement age, a wealth of knowledge right here. Warren Wealth Management, by the way, and this is Marcus Warren. So, Marcus, your clients now who may be my age, maybe a little bit older, and they're saying, okay, how should I react to this? So you say, look, this is just 2 or 3 days of news stories at this point.
Yeah.
Hold steady, or what do you tell them to do?
I tell them, number one is you have to have a plan. If this market, now really the bottom line is this: when markets get shaky, it's not the investments or the companies that are at risk. It's more so how that investor reacts to the way that the markets are shaking out for the most part. Meaning that when we take a dip, if you jump out, then you've basically, for the most part, cemented those losses. And so what we try to do is say, hey, you know what? We have to have a plan. You have to actually know how much money you have at risk and if you can handle the risk. Because most people, for the last 12 years, the market has gone up, and a lot of people have thought, hey, I could put a little bit extra money in the market. I can put a little bit more money in the market. When in all actuality, they're not ready for it. Because when we are where we are now, at least so far, this year, people get nervous and they jump out. And if you get nervous and you can't sleep at night, maybe you have a little bit too much in the market and you need to take some out.
Let's talk about the advantages of Warren Wealth Management. If you're watching now, if you watched Marcus in the past, then you know knowledge is key, and he likes to educate his clients. But I think also the fact that under one umbrella, instead of going over here and going, I got to talk to my tax accountant about this.
Right.
Okay, I've got a financial advisor over here. You really do it all, and you take pride in that, because I think if you get it from one source, a consistent source, then you don't have conflicting ideas. And by the way, saves you time, which everyone values their time.
Yeah, so, at our firm, we are a holistic investment advisory firm. So we're looking at investment management, income planning, Social Security maximization, insurance, estate planning, and then, of course, taxes. We want to make sure that our clients have a tax plan also. And when you walk into our doors and you know that we do all that under one roof, it gives people that peace of mind knowing that from soup to nuts, their finances are taken care of, especially when there's turbulent times. Because when you have a plan that's mapped out, whether it's an income plan, you know that you're still going to be getting that consistent income even though the markets are shaky. You know that your investments are allocated correctly even though the markets are shaky. And then more importantly, you know that, hey, overall, I know that I have a tax plan. I know that I have an income plan, a retirement plan. When you know that you have those things in place, then you're not panicking like a lot of investors are doing right now.
Okay, I'm going to use an analogy here. There's a lot of advantages. If you're good with your hands and you're a do-it-yourselfer and you say, okay, I want to remodel my bathroom, good for you. But because you know a little bit about finances, maybe even a little bit about taxes, does not mean you don't need a professional advisor when it comes to your retirement, when it comes to wealth management. Talk about that, because you've seen guys who say, I know enough, I'm going to do it myself.
Yeah.
That may be a mistake.
Right. Well, it's like the do-it-yourselfer at home who knows a little bit about plumbing, and so they try to fix their toilet, and next thing you know, it's stopped up forever, and then the wife is complaining or whatever. So it's the same thing with finances. Yes, there's a lot of, like I said, information that's out there, from CNBC to your Facebook group, social media, where it makes that person think that they know a lot about investments and finance, when really they don't. And markets like this test that. And I always say, hey, it always makes sense to have some sort of advisor, some sort of coach who is guiding you along the way. Tom Brady, LeBron James, those are guys at the peak of their game, right? But they still have coaches, they still have advisors who are helping them get better each and every day. I say do the same thing with your finances.
All right. As you can tell, Mark is very easy to talk to. He likes sharing his information. He'll educate you as well. So let's talk about something we always end with, is the 15-minute conversation. Perhaps you've watched Marcus and you like his style, his bedside manner. He imparts the message very clearly. If they want to talk to you, how does it work?
So if they want to talk to me, they can go to warrenwealth.net to schedule that 15-minute phone call. It brings up my calendar. We blocked out a few days where I can get on the phone, find out where someone is, where they want to be, and see if we're a good fit and we can help them get there. If we can, then we schedule an in-person meeting where we're able to sit down. They can bring in their statements, their tax returns, whatever they want to go over, and we can map out a plan for them.
All right. So if I tell you that part of my retirement plan is that I'm going to put some money down on some of these NFL playoff games, what would you say to that?
Not a good idea, probably. Unless you know something I don't know.
Yeah, not a good idea. Okay, your podcast, you are nationally known now and respected for your knowledge. So for folks who want to listen to you and maybe, on their own time, get a little bit of information, how do they do that?
They can go to wherever you get your podcasts, Apple Podcasts, Spotify, listen whenever you need to listen, and a lot of good information. You'll listen and you'll walk away with a lot of good knowledge, not just information, but knowledge, and that is what people want. All
right. You've educated me. I appreciate that. Again, Marcus Warren of Warren Wealth Management. We're going to take a little break here, and then coming up here, how would you like to make a trip in an RV? Okay, sounds like a pretty nice adventure. We'll tell you all about how you